Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Welcome back to another episode of our daily Forex Morning Mastery as we will be taking another fresh new look at the financial market today from a technical standpoint. And in fact, we've done very well in the last 24 hours as our patience finally paid off. Remember, at the beginning of the week, it was more of a consolidation as the market started the week very sluggishly. And yesterday we were getting some, of course, comments on losing positions. You see, this kind of thing usually happens in the market. And one thing we want to be doing as technical traders is to exercise patience and just allow our structures to mature before we jump into any positions. And in fact, the more confident and let me say comfortable with your strategy, you will not hesitate to take your positions whenever you have price transition into your familiar setup. So you keep on taking it until finally price moves and you can recoup the loss you made and then make some profit on top of it. So I'm very grateful and thankful for our patience. And finally, yesterday we were able to witness some significant movement in price action across board. We had it on the XAUUSD, quite a very huge move we had there. On the GBPUSD as well, and on the US oil, we begin to see some positive traction that we hope that it will continue as expected. So once again, I welcome you guys on board. And in preparation for today's Forex Morning Mastery, I have indeed done and conducted a comprehensive analysis on all of the assets on our watch list, utilizing simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. And for those of you who are with me on both my TradingView and Telegram platform, you definitely must have gotten an update as to how we are going to be managing our positions for today. So I encourage you to stay tuned in as we have very interesting setups lining up for today as everyone looks forward to the GDP data from the United States economic docket, which is likely going to be sending some waves across the market, and we do want to be on standby to capitalize on that next big move. For those of you who are joining us for the first time, you're highly welcome on board, and I'm very excited to have you around with us this morning. I know you will be wondering at this juncture, what is this all about? Well, this is the Forex Morning Mastery, and as technical traders, we usually gather here on a daily basis, coming together as a community and engage in follow-ups and reviews of our current positions, and of course, look out for trading opportunities in preparation of both the London and the New York sessions. The session officially kickstarts 9:05 a.m. West African time, 8:05 a.m. UTC, and I recommend that you stay tuned in so you don't miss out on any of the ideas we will be deliberating on today. My aim in this session is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with me, the better you will become in comprehending my analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I do welcome you on board, and I encourage you to actively engage in the comment section as this will help you to grow as well. So with that being said here, let's dive right into the business. And before I do, I have a couple of comments here. I see you, Jonah Aruna. Good morning to you. Glad to have you around with us. I also see you, what's the name right here? Give me a moment. Let me check this out. I saw this comment right here. Bayonne, okay, and you were talking about you want to join my mentorship group. You can send me an email and we can talk about that and see. Let's see if we can work together. Send me an email. You'll find it right in the description box of this current video you are watching. So welcome guys, glad to have you around this morning. So with that being said here, let's dive right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting the market sentiment today. And for today, we only have a high impactful event, but I do want us to have an insight into other economic features that has a tendency of influencing the market sentiment today. And for those of you who have been with me for a while, you know how important it is for us to check on the economic calendar, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So like I was saying earlier, I did include the medium impactful event on our radar for today, and in fact we have a handful of them right here. Now the first one, and which is the most important one for today, is the gross domestic product annualized for quarter 3. This is a key economic indicator representing the annualized percentage change in the US economy's real GDP during the third quarter of this year. And anticipation of this event can significantly impact the market sentiment, as it provides a comprehensive view of economic health and growth of the United States. And in fact, everyone is looking forward to this market, as a growth often strengthens market confidence and gives investors the add on to invest in that particular economy. Now, for today's data, we for the previous data on the GDP, we had 4.9% growth, 4.9% expansion, and we have economists projecting another 5% for this quarter. That is about 0.1% expansion from the previous data. Now, the question is, will this be the case? Are we going to be seeing are we going to be seeing the economy expand as expected, or beyond expectations, or even below expectation? And of course, this is going to be affecting the market sentiment today. And in fact, if this drops below expectations, the chances that the dollar will continue to nosedive hereby increases. So we look forward to see what the actual data will be on that one. This is coming up in about 3 to 4 hours from now. Then we also have some speeches from the United States and the United Kingdom. Today we are looking forward to the Bank of England governor speech. Governor Andrew Baylis is going to be talking today, and everyone in the market will be looking forward to what he will be saying. Now, his speech holds a considerable influence over our financial market, and his remarks provide an insight into the bank's monetary policy stance, economic outlook, and potential future policy actions. And in the recent times, we've noticed how the United Kingdom has characterized a resilient economy. We had a positive PMI data last week, and in fact, Andrew Baylis mentioned the potential of another interest rate hike for this year to curb the inflationary pressure in the United Kingdom. So we want to see, everyone will be scrutinizing his rhetoric today to understand what the market condition is looking like, and if there are chances for us to push the pound sterling further to the upside. So we look forward to hearing what he will be saying today. Then we also have speeches from Mester, Mesta, for those who don't know, Mesta is a member of, is the president and CEO of the Federal Reserve Bank of Cleveland branch, and he also is also a member of the U.S. monetary policy. Also a member of the U.S. monetary policy. Then we also have Beige. Beige too is going to be having a speech today. Beige reports on the current U.S. economic situation. So we look forward to see what we will be looking. We look forward to hearing what they will be saying today, as it will be giving us an indication into what the health of their economy is. So with all the information we have here, we now have a better timing of when the event will be coming up. We know the nature and impact of this event, and what we want to be doing as technical traders is to dive right into the current market conditions, looking at things from a technical standpoint, as we do know that the anticipation of this event alone has an influence on the way market participants will anticipate them and eventually reflect on the chart as price action. So talking about price action, let's dive right into the business. So my first chart here usually takes a couple of more seconds before it loads up. So I will just wait a couple of seconds to see if it would load up in due time, or probably I would have to open another new page if it doesn't. I don't know why the US oil chart usually behaves this way. All right, so we finally have the chart loaded. So the next asset we're looking at for today is the USOILSPOT, and the USOILSPOT hasn't been very well for us since the beginning of the week. Remember that we had a couple of buy positions triggered between Monday and Tuesday, which went into a loss. Yesterday as well, we also experienced a breakout of the $75.75 level. Price nosedive to the downside, taking us out of that position as well. So at yesterday morning, we were actually in a loss on the USOILSPOT, and until recently, we begin to notice this deep buying situation that began during the New York session yesterday, and in fact extended into the Asian session, where we begin to notice a little bit of consolidation phase going on at this point in time. Well, we currently having about 120 pips in profit from two buy positions, as US oil seems to be on the path of modest recovery, as at the point we are talking right now. Now, this resurgence in oil prices is likely have been fueled by the anticipation of the potential production cuts by the OPEC Plus member and the weakened US dollar as well. And remember, we are having a meeting. The OPEC Plus members are having a meeting tomorrow, and whatever they say tomorrow will definitely be more of how to cut oil production so that they can artificially raise the value of the oil asset across the market. Now, everybody is considering this in their radar, an anticipation of this one, and I think it could incite some bullish momentum in that regard. Then there is another latest development from yesterday. Concerns loom over supply disruption emanating from Kazakhstan and Russia due to a major storm in the Black Sea, and this, of course, has interrupted oil to the supply of oil to the worth of over 2 million barrels per day, and this is a very significant number. And we all know that if supply is affected, then if supply reduces, then there is a likelihood of demand to rise, which will result into a rise in the price of the asset as well. Then the GDP data coming up today is also going to be affecting the US oil. Remember, the US oil is a dollar denominated asset, and if the GDP data comes in weaker than expected, it may likely affect the US oil significantly. So we don't know how the market participant will react to that one. So let's dive right into the current market condition. Let's look at things from a technical standpoint. And for those of us who missed out on the earlier session, you have the privilege of being on the same page with us, as I will be taking you through how the week started for us on the 1 hour time frame. But before I go into the details, let me emphasize here that if you are new with us, the Forex Morning Mastery is a follow-up detail to the weekend videos I usually share. So if you do want to have a top-down analysis into this asset and how we were able to identify the key levels, the chart patterns, and the trend lines that we use to anticipate this week's trading session, then I encourage you to watch my videos that I share during the course of the weekend, as you will get a top-down analysis in that regard. And if in any way you missed those videos, you can check the link in the description box of this current video you are watching to keep yourself updated with the current market structure. So here today we are only going to be focusing on the 1 hour time frame. So on the 1 hour time frame, as at the beginning of this week, we saw how price action was initially confined within the $75.75 level and the $74.80 area to emphasize the level of indecision at that point in time. And remember that we had our key level for the week sitting somewhere around the $75 mark, which happens to be a strong psychological level. And this level here had played a major role in determining the direction of price action since the beginning of this month. And we saw how price was oscillating right around the key level, and you know how we use our key levels in this community. When price remains above the key level, we look out for patterns and structures that supports the idea of buying the asset, and if price drops below the key level, we look out for patterns and structures that supports the idea of selling the asset. Now, with the situation we had at the beginning of the week, we saw how price started the week on a bearish note, leading to the breakdown retest of our $75 area to incite our first sell position for the week. And we did mention that we will be moving our stop losses accordingly as price moved over 90 pips in our favor before the bullish momentum came in. Then, as a Tuesday's trading session, we talked about how the price took us out of the buy position. Hence, we had a buy stop order sitting above the $75.75 area to capitalize on the next move. We saw the price break out of the structure, triggered our buy position. Price moved about, let's say, 52 pips there, but it was so fast that it came in and took us out of that buy position in a loss. So we had a loss there on Monday. The same thing also happened during the trading session yesterday. We saw another breakout of the $75 area, and that one too as well went into a loss. So we had a couple of losses on the USOILSPOT before finally price action broke out of that level again with an engulfing bullish candle to break out of both the $75.75 level, and remember the descending trend line we identified on the higher time frame was also broken as well to emphasize the strength of the buyers at this juncture in the market. Now, with the situation we have here, we have the first buy position triggered. We also had the second buy position triggered along the $76.25 level, and as at this point in time, we do have two buy positions running in profit at this point. So well done to everyone who are taking advantage of this opportunity. And what you want to be doing right now is to ensure that we secure all the current buy position. I did mention this during my commentary this morning. So you do want to be moving all stop losses to anywhere below the second entry. And while you're moving your stop losses, please remember that you do want to be giving enough breathing space for price action to move around. So placing your stop loss around that area seems quite reasonable, and let's see how the market will play out in the hopes that price will continue the uptrend. Now, with a well-secured position, how do we intend to manage our positions for today? Are there chances that sellers could come in, or are there chances that buyers could continue or sustain this bullish momentum? Well, if we look at things from a technical standpoint, you will see that on the 1 hour time frame, remember we had this ascending trend line identified yesterday after connecting the series of higher lows. And in fact, this trend line here is going to be playing a major role in guiding our bullish expectations in this particular market. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall feel comfortable in a bullish idea. And the only condition that will make us sell is for price to break down and of course retest that structure to incite a sell-off in this market. Then another thing I would like to call your attention to is the descending trend line we identified on the higher time frame, which was successfully broken yesterday, as you will see here. Now look at how both the trend line and the ascending trend line here shares a beautiful confluence. And from a technical standpoint, whenever price breaks out of a key structure such as this descending trend line, we do expect that at some point in time there will be some temporary profit taking activities which could incite a retracement in the hopes of retesting the structure that was broken in anticipation of another uptrend scenario. Now look at how the descending trend line and the ascending trend line shares a beautiful sweet spot around the resistance line of this week at the $75.75 level. So as long as price remains above the structure, we will feel comfortable in a buy position. We might likely see some strong bearish moves to the downside here, but we don't need to panic. Price may come back into that bust up here to incite the uptrend scenario. So let's see how the market plays out at this particular point in time. And if price does not drop to the downside and it continues to find new highs, then we want to be looking out for another buy opportunity above the $77.10 area, which happens to be the highest point since last week Friday. And if price can break out of this level today, buyers may gain some more confidence to start pushing in more positions into the market, and this will likely incite a very impulsive move to the upsides, which we want to capitalize on. Then I do want to reiterate this because I know some of you may be asking again, especially those of us who are joining for the first time. There are two ways through which we usually take advantage of breakouts of structures. Now, the first one is for those of us who have been profitable on this asset, on whatever asset we are trading. So if you have been profitable, for instance, if you had bought at the $75.75 level and the $76.25 area, you will be in a minimum of close to 200 pips, around 200 pips by the time price will break out of the $77 area. And for the fact that we are profitable, we can afford to leverage or risk some of the profit we had made so far this week to test waters around that area and see if it's going to work. So what this simply means is that we can place a buy stop order above that structure, and then let's see if it's work. If it doesn't work, we know that we are only risking some of the profit we had made. However, if you are new with us, you definitely want to be waiting for a retest of structure for confirmation, as you do not have any structure to leverage on at this point in time. So you really need to see price do confirmation that truly buyers are going to the upside before you want to be jumping into any position. So I hope that is clear, and I hope that will not bring some more questions on how to capitalize on that one. So that is how we are going to be buying the US oil for today. Now, in as much as we're thinking of buying, we cannot ignore the potentials of sellers, of course, because we don't know how the market will be anticipating the GDP data, and we don't know what the GDP data will say that might incite a traction to maybe upside or downside. So we want to keep a balanced opinion in this particular market. So in that regard, let's look at the structure to identify what we might likely see here that will make us change our bias from bullish to bearish. Now, first of all, we've observed how the $77.10 area and the $77 area had been a selling niche since last week Friday at least, and we saw what happened here during the later part of the New York session yesterday as sellers continued to negate all attempt by the buyers to break out of that structure. Now, if it so happens that price breaks down, the seller pressure persists and leads to a situation where price breaks down the ascending trend line, you can see here that if price breaks down the ascending trend line, price will be back below the descending trend line we identified on the higher time frame, giving us a situation where price is back into the seller's territory. And we will need some confirmations, of course, as it could turn out to be a false breakdown. So we could look out for either a retest of the descending trend line or the ascending trend line. But most importantly, what we want to be looking out for are signs that buyers are finding it difficult to climb back above the ascending trend line, and this will reflect on the chart as continued selling pressure to push price to the downside. And in fact, we have multiple levels down there that we can use to maximize that move if it so happens that price drops and break down the ascending trend line. But as it is right now, we maintain a bullish bias, and the only condition that will make us sell is for the ascending trend line to be breached and broken to the downside. So these are my views on the USOILSPOT for today. So I do hope I made myself very clear. If you have any questions whatsoever, feel free to drop them in the comment section below. And so I will be taking the next 10 to 15 seconds off to see if there are any questions, while you can also use your time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's trading session. All right, so I see a couple of comments here. One from N. Krishna Veni, good morning to you. I also see Eric Mudavadi, good morning to you too. Thank you very much, and glad to have you around with us this morning. So in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list for today. So the next asset on our watch list for today is the cable market, literally known as the GBPUSD, and another phenomenal day we had yesterday after accumulating a couple of buy positions at the beginning of the week. Remember that we've been accumulating buy positions around the 1.2611, 1.2627, and of course the 1.263 380 level before that bullish momentum began. Now at this point, we are roughly running with over 300 pips across 5 buy positions for me personally, because I also added another one around the 1.271, which I later realized this morning that I never shared publicly. Well, I'm sorry about that, but at this point you will be in profit of over 300 pips from buy for 4 buy positions at least, marking the 5th consecutive day that the positive traction has gripped the pound sterling at this point. And right now price action is currently around a 3-month high, which is something phenomenal for the pound sterling. Now the US dollar currently is finding a lot of selling pressure. If you look at the DXY, you will see that this market sentiment is not in favor of the US dollar at this point, and this could be as the result of the belief that the Federal Reserve has finally concluded its rate hikes, and there will be some potential rate cuts, policy easing activities by the first quarter of next year. And adding to the US dollar's descent is the generally optimistic tone surrounding the US equity futures, which has been doing some phenomenal numbers in recent time, and this also has been pushing the narrative in favor of the pound sterling. Now, with the way things are going and with the way the pound is going this morning, as at today, we don't want to get too carried away with this momentum, as we might likely be seeing some profit-taking activities come up today, especially in anticipation of the GDP data, which is coming up later today. And of course, the Bank of England's governor too as well will be saying some things today, which everyone will be looking forward to hear what he will say, as it will give an insight into the health of the United Kingdom economy. So because of this, we want to be very, very cautious. We want to ensure that we secure all positions, as this event is likely going to be bringing in some high level of volatility into this market. Now, let's look at what has been going on here since the beginning of the week. Let's see how we are going to be managing the current position and what we will be looking at for in preparation of both the London and the New York session. So at the beginning of this week, right here on the 1 hour time frame, for those of you who had not watched my video on the GBPUSD, I want to reiterate that it is important for you to watch it so you can see the top-down analysis I did and how we were able to identify the structures that we use to guide our decisions for this week. The links are right in the description box below. Please check them out after the live session. I will only be focusing on the 1 hour time frame here. Now, since the beginning of the week, we saw how price was oscillating around our key level, which was situated at the 1.2600 area. I hope we all remember that. And then we saw price confined within a range. Just let me zoom this in a little bit so that we can see things clearly. So we saw how price was confined within the 1.26110 and the 1.25910 area, as you will see here, to further emphasize the level of indecision at this point, at a particular point in time. And of course, you know how we do it in this community. When we have this kind of situation, we want to wait for price action to either break out of the resistance line of this trade or break down the support line to give us an opportunity to trade. And at no point in time we saw price come into the support line at all, which further emphasizes the fact that price is more likely to find new highs in this particular market. And as a result of this observation, we position ourselves just right above the 1.261, where we had our first buy position for the week triggered. And in fact, for the last 24, 36, 40 hours, price action was just right around that area, triggered that level, and continued to come back into the entry point, giving us an insight into the indecision at that point in time. And I hope Torres Master is still around. You were complaining about your GBPUSD, that you got your position triggered and price came back. I do hope you are in this trade, as price moves significantly well in our favor. And this is what I was trying to say here yesterday, that we want to be very patient for our structures to mature, and once they mature, let us trust the process. And if it goes into a loss, it's okay, it happens in the market. We only lose so that we can make money. And at the end of the day, you can see what has happened here. Price action just moved considerably well in our favor. And remember that we had multiple entries as well. We had the 1.26270. We also had the 1.26380. And during the New York session yesterday, I also informed us to be adding one more position at the breakout of the 1.26650 area. So at this point, we had a minimum of 1, 2, 3, 4 positions running with over 300 pips in profit at this point in time. And for those of us who took advantage of this opportunity, well done, and kudos to you for being on standby to capitalize on this particular momentum we took at the beginning of the week. So with that being said here, you know how we do it. The next thing we want to be doing right now is to ensure that we secure our current positions, as it is very, very likely that we begin to see some selling pressure come in today, especially in anticipation of this major event I talked about earlier. Now, in that regard, let's move our stop losses accordingly. Anywhere around the 1.26900 area seems most appropriate, and while you do so, ensure that you are also trying to give enough breathing space for price action to move around. So move your stop losses accordingly. Let's protect and secure these positions while we wait for new trading opportunities. Now, with a well secured position at this juncture, what is going to be our next line of action for today? Now, the first thing you would observe on this current market condition is that price action has hit a new high at the 1.27330 level, especially during the Asian session, and immediately price tested that level. You can see the nature of the candle, the nature of the wick. We have a shooting star candle, which from a technical standpoint reveals the strong presence of sellers around this area. Now, the question going into today's trading session is, are we going to be seeing a retracement move, which will be as a result of profit-taking activities from those who had bought the pound at a cheap price at the beginning of the week? Or are we going to be seeing an uptrend continuation pattern around this area? Now, before we go into that, let's look at the ascending trend line that has been supporting this bullish momentum since the beginning of this week. In fact, I would like to extend this ascending trend line further, as it's going to be serving as a major determinant of how far this retracement phase will go, if it so happens that we have a retracement move for today's trading session. So I want to mark out this support line of this range, which falls exactly around the 1.26870. So I want to be marking this level out, 1.26870 level. And in fact, I would like to give it a different color to emphasize its importance at this point in time. So we give it a wine color. I hope that is beautiful. All right, so we have the 1.26870 right here, which happens to be the support line of this current range that is going on right now. So the question here is, will price action break down this range, this level to the downside? If it does, then we are likely going to be seeing the beginning of a retracement phase. Now, how far will the retracement phase go is what we don't know now. So if we see price break down this 1.26870, how far will it go? Well, that is why I had to extend the ascending trend line you can see here. So if price action gets into any of this area, maybe around the 1.26600 level and the 1.26650 area, we want to see how the market will react to this particular zone. Now, if we begin to notice that sellers are finding it difficult to break down the ascending trend line, where price transitions into maybe a reversal pattern, it could be a double bottom, a head and shoulder pattern, or probably a falling wedge, whichever case it may be, then we will definitely be looking out for another opportunity to buy and join the second wave of the bullish momentum that started this week. So you can see how that ascending trend line still plays a major role in guiding our trading decisions for today. And for those of you who feel comfortable scalping and you might want to take advantage of selling opportunities, well, this is a counter trend trade you might want to capitalize on, and I think it has about a minimum of 25 to about 35 pips in profit for counter trend traders around this area. Personally, I'm not going to be taking that trade, as it's not part of my radar, as I will be patient enough to wait for price to come into that ascending trend line, and let's see how the market will react to that structure, which could take about 2 to 3 hours before that formation happens. So we want to be patient on that one if we want to be joining the uptrend continuation. But if you are a scalper, a counter trend trader, or a day trader who is interested in taking few pips, well, you might want to capitalize on the breakdown retest of the 1.26870 level. Now, with that being said here, there's another thing that could happen here. Now, if price gets into this ascending trend line and instead of buying pressure resuming around that area, and we begin to now notice that sellers continue to maintain the momentum in such a way that we have this trend lines broken to the downside, well, a retest of structure will be a beautiful opportunity to now join that downtrend move. Then at that point, I would like to consider selling the GBPUSD to the downside. So let's see how the market will play out around this area for today. So we need to exercise patience, draw the levels and the trend lines, and just allow the structures to mature so we can jump into the position. For me personally, I had this 1.27100 level triggered during the before I woke up this morning. I saw it triggered and price is running a loss on that one. But I will advise that if price does not break down the 1.26870 and instead it continues to climb up, then a breakout of the 1.27330 level will be welcoming more buy positions to our existing trade. So let's see how the market will play out for today. Our center of focus for today is basically between the 1.27330 and the 1.26870 area, where depending on the direction of the breakout will give us an insight into where price is likely going for today. So this is my simple view on the GBPUSD. So let's mark out those levels on our chart and allow the structures to mature before we jump into any position. But trust me, I will be with you in the comment sections of both my trading view and Telegram platforms to give you updates as at when due. So if you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the last and final asset on our watch list for today. I see your comment here, Ika's Diary. Good morning to you. And you are asking, you've seen quite a lot of people use look left method to mark support and resistance, but in your strategy, you use levels which are recently made. Is there any specific reason for that? Well, that's a very tricky question to answer there. Well, of course, one thing I would just like to mention here is that everyone has his or her own way to look at the financial market. And one of the things I usually tell my clients is that in the financial environment, in this kind of environment we find ourselves, there is no right and there is no wrong. So I don't want you to come into the space thinking of there is a right approach or there is a wrong approach. No, you don't come into this environment like that. If you come into environment with that kind of mentality, you will become so rigid that you will find it difficult to shift perspective immediately. Now, the reason, well, I don't know the reason why that is. Well, this is my own approach. This is what I have been using over the years, and it has worked quite well for me. And they also have their own approach, and it has been working quite well for them. So everybody has his own way of looking at the market. And even when I do my mentorship program, I usually tell my clients that everyone is unique, and the way you see the market is definitely different from the way I see the market. And just believe in whatever you do. If it's worked for you, stay with it. If it works for you, why do you want to change it? So it works for them, that's why they're using it, and this works for me, that's why I'm using this. So I think that's the only way I can answer this question. So there is no right or wrong in this case scenario. I hope I answered your question, Ika's Diary. So in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, let's move right in to the final asset on our watch list for today. So the last asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. Another phenomenal 24 hours we had here as we saw price action move over. How many pips was that? As at this morning, we had over 750 pips move from 4 buy positions on this particular asset, and in fact it has been a wonderful day. The week started very slow for us. Remember, everyone was on the edge of the table, on the edge of their seats, waiting to see where price is likely going to go. Sellers maintained their stance between the 2018 and the $2013 zone for a while before we finally saw the breakout happen yesterday. And for those of you who capitalized on this move, well done and kudos to you for being on standby to take advantage of this opportunity. Now, this remarkable move is well supported by the possibilities of rate cuts in the United States at the beginning of next year. So the dollar is not looking very popular at this particular point in time. And when we witness this kind of situation, we usually see this affect positively safe haven assets such as the gold. However, the immediate outlook for gold remains very bullish as it is right now, though we could still witness some retracement phase happen today. But I'm still thinking that price still has room to climb new highs, maybe get into the 2070 before the end of the week. Primarily, this momentum is fueled by the ongoing selling bias of the US dollar and intensified by the dovish expectations of the Federal Reserve. However, a crucial factor to consider is the imminent release of the US GDP data coming up later today, which has a potential to significantly influence the market's dynamics at this particular point in time. So in that regard, we need to take some precautionary measures to ensure that we are on the positive side of our portfolio. Now, let's go into the details here. Let's see what has really happened since the beginning of the week for the sake of those who are joining us for the first time. Now, at the beginning of the week, remember that we had our key level situated at the $2,005 area. Remember, we identified this on the 4 hours time frame for those of you who watch my videos during the weekend. If you had not watched my video on the XAUUSD, please do so. Check the comments, check the description box below to watch them, as it will give you a background knowledge of how we got to this level. And you know how we do use our key level in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying. Now, we saw how the market started this week with a very strong bullish momentum. Price started around the $2,050 level with an engulfing candle. We saw price climb into the $2,013 area before we begin to notice this continuous selling pressure around this area. Now we had a range where price was confined within the 2013 and the 2050 cent level, as if that number is confusing to me anyways. So we have price confined within 2013 and the 2050 cent level. And as a result of this, you know how we do it. Whenever we identify such range, we want to exercise patience and wait for either the breakout of the range to happen to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. And coupled with that range was this ascending trend line, which has been supporting this bullish momentum since the beginning of the month of October. And this trend line here, as you will see, has been holding sway for the buyers. Now, as a result of the fact that price remains above the ascending trend line, we were looking out for buying opportunities. So what we did at the beginning of the week was to place our buy stop orders just right above the $2,013 area to capitalize on the next move. Though price got triggered, it took quite a while before the momentum began. Yesterday we were still struggling with our buy positions, but finally during the New York session, I think a couple of hours into the New York session, we saw the momentum began. Price broke out of the $2,018 level to trigger our second buy position, and we kept on adding more positions. Remember, during our XAUUSD live window before it closed abruptly yesterday, we said we will be adding more positions at the $2,028.50 level. So it was quite. Then we also added one more, had a 2043. I'm not sure if I updated on the Telegram and TradingView platform in there. I can't remember, but I also added one more around that area, making it 4 positions running with over 750 pips in profit. And for those of you, once again, that took advantage of this move, congratulations to you. Now, the next thing we are going to be doing right now is to ensure that we secure all positions. Remember, when price action moves significantly well in our favor, we do want to be moving our stop losses accordingly, lock in this position, and let's see how the market will react to the structure. Now, with the way things are going now and with the appearance of selling pressure around that $2,050 level, we do want to be moving our stop losses accordingly. Now, if you still have a buy position running, it is very, very reasonable at this juncture to move all stop losses, and anywhere around the $2,040 zone seems most appropriate to lock in all positions. And while you're trying to lock in your positions, I usually emphasize that you do want to be giving enough breathing space for price action to move around, just in case it's just retracing to continue the uptrend, and you will still be in the position as it does so. So with a well secured position at this juncture, how do we intend to capitalize on the next move? Are we going to continue buying, or are we likely going to be seeing some retracement to the downside for today? Well, before we go into that, I don't know what's happening here. Give me a moment. Let me try and see. Let me reset the chart. Okay. So before we go into the technical details here, I would like to share with you some of the perspective and bias that is currently going on in the market right now, as major economists and market analysts are thinking that the value of the gold prices that has been rising since the month of October was likely caused by market participants who had previously bet on the value of gold to drop. That is, those who are shorting the gold before the beginning of the month of October decided to reverse their bet and instead bet on its value increasing, hereby covering their short position. And this in turn has resulted in the reversal of bet, likely contributing to the increase in the value of the gold that we saw here. I'm not saying this is the only factor, but I'm just letting you know that these are one of the possibilities that are driving the market sentiment. And if that is going to be the case, then it's very possible that a crash could happen anytime soon. And if a crash will happen, well, we have structures that we will be using to guide our decisions for today. Now, going back into the chart, and let's talk about this from a technical standpoint. Now, the first thing first here is to acknowledge that we have an ascending trend line which has been working for us, remember, and we identified this on the higher time frame, as you will see right here. Then remember also, for those of you who watch my weekend video on the XAUUSD, remember that we also have another trend line here which connected some series of high and lows, as you will see right. I hope it's clear enough for us to see. So I would like to extend this trend line so that it can capture the future of price action here. So as you will see right now, price action just broke out of that trend line a little bit. Then as soon as it broke it, it came back down again below the trend line. So, and you know that whenever we have an ascending channel that like this, we expect that when price gets into the resistance line of the ascending channel, we see price retrace back to the downside, and when it gets into the support line of the ascending channel, we see price ascend into the resistance line of the channel. Now price is back into the structure, and we are seeing some selling pressure resume again. Now the question is, will the momentum be sustained in such a way that the $2,050 level will be broken to the upside, or are we going to be seeing price retrace back into the support line of the ascending trend line, maybe to break down further, or in fact incite more buying opportunities from here? So you will see that we are at a very crucial juncture in the market, where our center of focus for today is basically going to be between the $2,050 level and the $2,043 area, where depending on how price reacts to the structure will determine what our next line of action will be. Now, in addition to that, I think I can see a trend line which I can use to guide my decisions going forward. So let me see if I can bring out something. I will call this one a temporary one. It's not going to be a major one at all. So we just call it a temporary one, and let's see how the market will be reacting to this trend line. So bring back our candle chart. Let's do some little readjustment so that I can capture most of the wicks. Here we go. And in fact, it also shares a beautiful confluence with the $2,043 area. Now, in addition to that one, I want to also have another level just for confirmation's sake. I think the $2,040 area seems most appropriate, considering the round figure of that price and also the fact that it's a very strong psychological area. So I will just thin this a little bit, and then let's give it a, what color should I give this one? Okay, let's give it a blue color and then label a $2,040 area. Now I will be sharing with you why this is important in a moment. Give me a moment. Let me highlight the price level. All right, so we give it a blue color, right? And then we have something like this. Now, when we bring back our candle chart, you'll begin to see that this level was a buying niche at some point in time. And right now, price action is gradually approaching that structure. So if it approaches the structure, then price will have broken down that ascending trend line, that temporary one there, broken down to $2,043 area, and if a retest of structure happens here, this will give us a confirmation to join the decline to the downside, or the breakdown retest of the $2,040 area will welcome selling opportunities, and we shall be looking at a TP target somewhere around that ascending trend line we identified earlier, which will be dovetailing to a minimum of 200 pips in profit. Now, if price goes in that direction, we want to be capitalizing on that move, considering the amount of profit we stand to gain, and also considering the small stop loss that is in place in this area, which will be dovetailing to between 50 to 60 pips to catch there. Now, if price goes on to get into the ascending trend line, then we want to be patient as soon as price gets into structure, secure all positions, and wait to see how the market will react to that level. Now, if it breaks down the level, then we look out for more selling opportunities to join the decline to the downside. And in fact, if we begin to see buy pressure resume, where price action transitions into a reversal pattern, it could be a double top structure, double bottom structure, head and shoulder pattern, then we might likely be joining another wave of bullish momentum from that area. So this is one scenario that we will be looking out for to sell the XAUUSD today, and of course I will be with you in the comment sections to give you update as at when due. However, if price action decides not to break down the $2,040 level and it continues to climb and find new highs, then I want to be looking at the breakout of the $2,050 level, which happens to be the highest point, at least for this. No, it's not for this year, I guess. I think the last one was 2070. So we look forward to price breaking out of 2050 to welcome more buying opportunity. Personally, for me, let me let you know this. The breakout of the $2,050 level is going to be a risk because it's not likely that the momentum will be sustained above that area. In the meantime, in the long term it can, but in the meantime, I still believe that, I used to mention this thing about price action hitting new highs, that when price action hits new highs, it usually takes a considerable amount of time period for price action to acclimatize to that structure. So when price action hits a new high like this, there is this emotions of fear coming into the market, which usually dominates it and result into people closing in some of their positions because of the fear of a crash from that area. And this usually reflects on the chart as retracement phases, consolidation phases, or choppy scenarios in the market. So because of this in mind, I want to just risk it and see if it works. If it doesn't work, no problem. But if it works, we are fine and good on that one. So I will only be looking out for buying opportunities above the 2050, but I still have a feeling that before the 2050 can be broken with much confidence, it will take, first of all, some retracement move, which might be the beginning of a selling opportunities below the 2040 before it now gains some momentum to be able to break out of the $2,050 area. So these are what I'm looking at on the XAUUSD today. So basically for today, our center of focus for selling opportunity remains between the 2043 and the $2,040 area. If we see selling pressure around that area, signs that buyers are finding it difficult to climb back above that temporary trend line I identified there, then we look out for selling opportunities. But if buy pressure resumes, we maintain our bullish bias and look out for buying opportunities at the breakout of the $2,050 level. So this is my simple view here on the XAUUSD for today. It's a very simple setup. I encourage you to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. If you have any questions, feel free to drop them in the comment section. While I take some 10 to 15 seconds off, we'll be rounding off gradually. And if you have found this content helpful and useful in making your independent trading decisions for today, I would really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and in fact, it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them, and in fact also helps the community to grow too as well. Thank you in advance for doing so. So with that being said here, let's see what we have in the comment section. Then I also dropped the link to the XAUUSD live window right in the comment section. It's pinned at the top of the comment section, so you want to be clicking on that link. Click on the notify me button so that you can get notified as soon as we come on live. Now, for those of you who don't know what the XAUUSD live window is all about, well, this platform was born out of popular demand from a majority of us on this platform, where we usually come together during the New York session, gather to monitor real-time price action on the XAUUSD. So it usually kickstarts 5 to 10 minutes into the New York session, and it runs through between 5 to 7 hours of the New York session, depending on how the trading activity is for that day. So I look forward to seeing you guys right in that comment section. So with that being said, let's see what we have in the comment section before we go on to round up for today's trading session. All right, so I see a couple of comments here. I can see Ike's Diary's comment saying that it looks like forming a flag pattern. We will see. Are you talking about the XAUUSD? Is that what you're talking about, or the GPUs? I'm not sure what you're talking about there. Then I can see Kelechi saying that I observe you draw some levels from the body and some from the week. What informs your decision as to where to draw this level? Well, like I mentioned earlier, it all depends on your perspective to the market and how you see the market. There is no right, there is no wrong. It depends on what you see, and that is how I see the market and that is how I feel that I should mark out my levels, which is in alignment with my own personal psychology. And it has been working for me. And I think that's why I'm doing that. All right. So it's my own perspective, just my own way of doing it. Okay. So, Babi TV from your Telegram link. Okay. Hello, Babi TV. Trust you are doing very well. Glad to have you around with us this morning. Hiker's Diary says, okay, XAUUSD. Okay. Yes, of course. Of course. It looks like an ascending triangle, if you would ask me. That is true. I never thought of this. So we have an impulsive move all the way into this area. And then if price action continues like this, we have like an ascending triangle, which could incite a breakout of that structure to incite an uptrend continuation. So it's more or less like this, since we have an horizontal resistant line. It's an horizontal one. So we can't call it it's an horizontal one right there. Then we have the one light, so it's more or less like an ascending triangle, if you would ask me. So good one there. So it's more or less like a trend continuation pattern. So let's see how the market will play out, and it can as well break down the structure, retest it to incite a retracement to the downside. So that is why I said earlier that we should all secure all our positions, and let's ensure that we protect our position against any sudden pullback that may happen. So in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, I will be rounding up for today's trading session. It has been a wonderful moment with you guys. I really do appreciate every single moment I had with you today, as we were able to take on 3 assets which we have been monitoring since the beginning of the week: the USOILSPOT, the GBPUSD, and finally the XAUUSD, popularly known as the gold spot, and all of which we were able to identify simple trading setup using fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today. And I do hope you are able to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. And for those of you who are joining us for the first time, I do hope that you gained a couple of things today. And in fact, if you do, I look forward to seeing you same time tomorrow, so that we can come here again to review how well these assets have been doing and prepare for tomorrow's trading session. Trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather here to make your own independent trading decisions. So on this note, I wish us all the best of luck. Remember, consistent risk management strategy is very, very important. Every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So I look forward to seeing you guys. I see your comment, Veni. Thank you for the compliments. I'll take that as a compliment. Thank you very much. And Ike's Diary, you are welcome. So I wish you the best of luck today, and I look forward to seeing you all in the comment section of both my TradingView Telegram platform and of course during the XAUUSD live window as we continue to monitor price action. Trade smart, trade consciously, and I wish you a wonderful evening, everyone. Bye bye.